before that happens, probably before that happens, there is a deadline coming up here that I think we're all aware of. And if you've been in the working world, you're certainly aware of the tax filing deadline. That is, of course, a little over a month away, April 15th. One of the people who started his career preparing other people's income taxes is Ed Slott, now considered a guru when it comes to tax planning. Here's what he told Morningstar about his early days when he was a CPA.
Every year they came in, I'd say, oh, you know what you could have done? Oh, you should have done this. Oh, you missed that. And it hit me that who wants to hear what I could have, would have, should have done? You can't go back unless you had a time machine. So I realized I was looking backwards, reactive. And that's when everything changed for me. I said, wouldn't it be more valuable if I did tax planning instead of tax preparation? And that opened up the whole world of adding value, tax planning, looking ahead.
We've spoken about this before, the difference between tax preparation, looking in the rearview mirror versus looking through the windshield, and tax planning. Can you give us some examples of the value of tax planning?
We're just seeing a tremendous amount of value with our business, the Retirement Tax Partners, and, we're preparing now federal, state, and local taxes. If you haven't got your taxes done, just keep in mind that if you are a listener, call us up, ask about our promotional special this year. You can get your 2024 taxes done for $150. So we're offering that great promotional special. You can even make your appointment time right online at retirementtaxpartners.com. But, I handle a lot of the financial planning side. Danny does the intake on taxes. And, this, again, is another area where a lot of these things overlap each other. And to me, I think there is a tremendous amount of value when it comes to tax planning. One example is somebody who recently came into the office. This lady in particular talked a little bit about how last year was her best year ever in her business. She's a couple of years off before she retires, but looking at having one of her best years ever, it really could be a good idea for her to look at max funding a traditional IRA for last year. Now, with a traditional IRA, what ultimately you get into is you get into some maximum contributions that you can make. So it's going to immediately have a tax benefit for her if she's able to go ahead and do that for 2024. That is one of those areas where Ed Slott was talking about going back in time. You still have the opportunity, to fund traditional IRAs before April 15th or when you file your taxes. And if she's looking for, bigger tax savings ideas in the future, she might consider having some type of company-sponsored retirement plan set up for her business. She could also consider the options of doing like a SEP IRA, which would allow for higher contributions. So, one example somebody who listened to the show took advantage of that tax savings coupon that we have, came in, and then we were able to kind of compound the growth by talking about some other ideas to look for saving her money. We had another client that had recently come in, and unfortunately she had lost her husband last year, so she was coming in. Things are different this year, but going through and looking at her situation, through the life insurance and through some of the other proceeds she got, she really hadn't needed to take any money out of her investment accounts last year. So when Danny got with our CPA and worked on having the taxes prepared, they had noticed that because she didn't take any money out of taxable retirement accounts, she had the ability where she could have taken out up to $15,000 and used it for additional income needs. Now, if she didn't have those additional income needs, she could have taken and transferred that money over to a Roth IRA. And in the Roth IRA, that money, if it follows the rules of 5 years or longer and she's over 59 and a half, all the profits she gets from that, she stands to benefit from tax-free income for that account. So down the road, if she needs to take a larger withdrawal from her retirement account to, take a dream vacation or buy a vehicle, she would have had that money in a tax-free account. Or if financially she's, well off, that she maybe is not going to need that money, and that money is going to be left to her beneficiaries, her children in this case, it's most likely that when the children inherit the tax-deferred retirement account, that account is not going to be having the same tax benefits that she could get right now, meaning that, if the kids are in the higher income earning years, they can end up paying a lot of taxes. So again, we did the what if analysis, and that's one of the things that we do. And I think what makes Retirement Tax Partners unique is doing that what if analysis, and not only talking about what are the things that can be done this year, but what are the things that can be done in the future. We also have what is called our Retirees Tax Saver Checklist. And in the Tax Savers Checklist, had another gentleman that had heard the commercial came in. And again, going through the checklist, what we're doing is we're taking a look at things like, towards the end of the year, if you have non-retirement accounts, are you doing that analysis with your team, looking at what your capital gains and or capital losses are and doing the end of the year tax planning? Do you own the right assets in the right accounts that provide more, tax efficient benefits? Scott is talking to people about things like the health savings account if you're still working, making sure that you're maximizing those. If you're over the age 70 and a half and you're donating money to charitable causes or your church, are you doing it from your retirement account? Because it can be more tax favorable than just taking money out and paying taxes on it and giving the money. So all of those things are part of that tax savers checklist. We have a couple of spots left open. If you haven't got your 2024 taxes done yet, again, that Retirement Tax Partners can help you coordinate that with one of our enrolled agents or CPAs, and you can take advantage of that special, because I truly believe that there is tremendous value in tax planning. And again, we can take a look at your situation and see what we can do to help minimize the taxes that you pay this year and in the future for your family.
By no means are we saying you should, neglect that tax deadline that's coming up on April 15th. Pay your taxes if you owe them. We're not talking about tax evasion, tax avoidance here, but also prepare for the next 15, 20 years where taxes at some point almost certainly going to go up. What are you doing to minimize, if not outright eliminate, those obligations that come down the line? If the answer is nothing, well, it's a good time to have that retirement tax savers checklist done for you to show you what you can do to minimize the effect down the line. It all starts with reaching out, setting up a time to speak with the team at Retirement Tax Partners as part of America's Retirement Headquarters. You can do that by giving a call, 419-794-3030, or you can reach out on the website as well. That's arhq.com.